Welcome back to U.S. Farm Report. Jim McCormick and Joe Baklovic joining us for our roundtables as we unpack one of the biggest reports from USDA of the year. And a bit of a shocker here when we talk about corn, Joe. USDA lowering yield 3.8 bushels per acre. Ending stocks lowered almost 200 million bushels. How much of a game changer is this?
It's a little bit of a game changer. The market had very clearly been discounting some friendly numbers ahead of the report, but this report was more friendly than just about anybody had expected. They took the corn yield from 183.1 nationally for last year down to 179.3. They did adjust harvested acreage a little bit, but the end result was a crop size that was 276 million bushels smaller than what they had previously reported. This is a great thing for prices, and it's a great thing for farmers. The timing is unfortunate, though. I really wish that we would have had the, put them in air quotes, real numbers a few months ago when harvest was going on and farmers were making the decision if they're going to pay interest and pay storage. And a lot of corn got sold at lower levels because we thought the crop was bigger. I love to see the higher prices, but the timing is a little bit less than desired for me.
No doubt. And Jim, I guess we shouldn't be surprised considering what the spreads have been doing in the corn market and the fact that it was so dry at the end of the season and during harvest, right?
Well, there's no doubt about it, Michelle. The trade was looking for the crop to get a little bit smaller, like Joe said, but it was definitely a surprise. We now got a nice sort of run going. Technically here, at least in the mid-session, the market went right down to the technical downtrend line and stalled out. Now the question is how much further we're going to go. The producers has been very aggressive selling corn here at the very end of 2024. We've heard a lot of end users that have up to 90 days worth of coverage. So it's going to be really interesting now that with this friendly numbers, what's it going to take to get that farmer to sell that next chunk of corn? Fiscally, the farmers are definitely feeling the pinch. This is going to definitely make a little bit brighter picture for them. One thing to keep an eye on, though, new crop corn, it definitely is not following up as fast as the old crop's going today.
Joe, what do you think we need to get above these chart resistance areas we've been hitting our head on in the corn market?
I think the fundamentals are good. I think the soybean market and the situation there, we haven't talked about it. It was a little bit friendlier for old crop. But the world situation is still kind of an anchor on the whole complex. You've got these big South American crops expected, big, healthy global balance sheets for soybeans, whereas in corn, things are tightening up a little bit. So I think that to fast forward a little bit, we're going to plant a lot of corn acres this spring. And that ultimately, that idea, I think, is maybe a limiting factor for these markets.
You bet. Okay, so let's talk about soybeans. A bushel per acre drop in yield, Jim. We also saw ending stocks down 90 million bushels. But with what Joe just said about the big South American crop, is this as much of a game changer?
It's not much. And Joe's right. I mean, when you look at the Brazilian crop, they chose to leave it unchanged this time around. But I think 9 out of 10 traders are looking for that crop to get bigger. So the northern part is a little bit wet, but overall it's looking good. Southern Brazil is a little bit dry. But, the forecast right now I'm seeing is as we get to the latter part of January into February, the rain is supposed to come. They're going to, I think at this point, Michelle, have a huge crop, 172 to 175. That'll more than offset what we lost here in the U.S. World stocks will still be cumbersome. And that's going to be, like Joe said, that's going to be an anchor on corn. I think in the big picture, when you look where it's at, the money still says to plant corn. And I think when that comes down to it, we'll plant 95 plus million acres of corn this upcoming spring. And that, if we have good weather, will be bearish in the long run.
No doubt. So, Joe, we're going to have a tug of war between corn and soybeans here. Obviously, it looks like. So what wins out, do you think?
It could be a little bit of both. I wouldn't be surprised to see some additional upside short term. From a seasonal standpoint, the markets tend to hold together the first 3, 4, 5 months of the year until we know a little bit more about the U.S. crops. Maybe this year could be different. Last year was a calendar year where we trended lower in row crop markets for an entire calendar year for the most part. But I'm not super pessimistic from these levels. I think corn has a better story than soybeans, certainly, but this makes it a lot more interesting.
No doubt. When we come back on U.S. Farm Report, we're going to talk just a little bit more about those South American production numbers and why USDA left those unchanged, plus what more we see for price action coming up.